Good afternoon, everyone. This is Trader Tim from eMiniMind.com doing a Monday market analysis video for the 10th of April, 2017. Fair bit on the calendar this week. JOLTS report tomorrow after the bell. Thursday jobless claims, PPI, and then Friday consumer price index, retail sales before the bell. Um, we're kind of stuck in this consolidation between the 250s. Last week we broke out to the upside. We broke the short, but then retraced back into the we'll call it the cautious zone, the 2340 up to 2360. The fact that we broke to the upside first certainly gives the long some strength, but that doesn't mean necessarily that there's been a lack of trading opportunities. What I was talking about last week is looking for shorts at the 2360 and looking for longs down at the 2340. And that's exactly what we had this morning. We traded higher from the open, and once we established a high, broke the prior swing low, which is the first thing that I look for on a trend break. So if we notice on this move up, we had one little candle pull back here, made a new high, pulled back, made another new high, pulled back, again, new high, pulled back, didn't break the swing low, made a fifth high, pulled back, didn't quite break the swing low yet. Now this little one tick rally did correspond with a relatively high tick for the morning, just based on the first 30 minutes of tick price action in the mid 700s. But if you were to wait for the break of the swing low, we traded right up to the 50 to the tick and then had a super strong sell-off right from that 50% retracement, and notice that 2360.50 was the level, and we were talking about shorting around the 2360s and getting long around the 2340. So a great opportunity for a short. A question I often get is what to do when we have these little swing highs. Do we pull from the lower swing high or the absolute swing high? In most cases, it really doesn't matter. If you would have used the lower high, 6 ticks, entering at the 50, even rounding down and adding a tick, 6 ticks would still keep you in the trade. If you were to pull from the high or the um, higher high, then certainly the trade took no heat. But whichever one, you can split the difference. On the lower one, you could just round down and not add a tick if you draw out both of them and you see that they're close like this. The 50 might line up with the 61.8. Just gauge it by, if I entered at the more aggressive one at the 50% by rounding down, where does 6 ticks leave me? Does that still include the 50% of the larger one? It doesn't necessarily have to go all the way to the 61.8, but when I'm looking at the 512 tick chart, since it's such a small time frame, you can base your trades just on the most recent setup. So like back here this morning, you can just pull from the pullback low to highs and let the market pull back. It traded right to its negative 23% target. You don't have to wait for a large move to come all the way halfway back. This setup would be visible on a 15-minute. It's a little bit larger setup. If you're just trading the first 2 hours of the morning, you can be active in the most recent setup. So, that includes the smaller setups that have swing lows that we may not have pulled all the way back to the 50 from the open. You can use these higher or lower swings. Now, if this high this morning would have corresponded with the high tick of the morning, then I don't wait for a break of the swing. I would just take from highs to lows and then get in at that setup. But in this case, the high tick of the morning was about 706, and then the high price was 735. So passing on the first little guy up here is okay, uh, and you can wait for that swing to break because the break of a swing low or a swing high is a very strong indication that we have a trend change in the works. And so even though we're between these two 50s, the markets are looking good. There's a lot of clean price. I mean, just looking at the price action from today, a lot of clean trending bars to one direction, into the other direction. So even though the daily candles are, dojis and nothing much to write home about, there's been some good opportunities throughout the day. So tomorrow we'll be doing another trading room session right at the open. You can check that out at eminimind.com/VIP. We'll be talking about the setups in real time, answering your questions. And as always, if you want to reach me directly, shoot me an email, tim@eminimind.com.